In this video, we'll talk about how you might be able to reduce the impact of self-employment taxes on your business. If you don't know who I am, my name's Chris Dime. I'm a certified financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. One of the most common strategies we implement for our self-employed clients is helping them flip their LLC from pass-through taxation to S-Corporation taxation. If you don't know what I'm talking about, that's totally fine. In today's video, we're gonna touch on what is an S-Corp, why you would ever choose to be taxed as an S-Corp, and then when you should look into filing as an S-Corp. So let's jump in. First and foremost, what is an S-Corporation? When you are self-employed, there's a number of different ways in which you can have your business structured. You can have your business structured as a sole proprietorship, a partnership, an LLC, or a corporation. If you do decide to structure your business as an LLC, you have multiple tax filing statuses. You can have your LLC taxed as a pass-through entity, you can have your LLCs taxed as an S-Corporation, or you can have your LLC taxed as a C-Corporation. Now there's pros and cons to each one of these. We'll have to do a video another time on the eaches between all these different combinations. But in today's video, we're gonna focus on those who have structured their business as an LLC and are currently having it taxed as a pass-through. Pass-through taxation means that all profits from the LLC flow to the members and onto their personal income tax returns. And those profits are all subject to self-employment taxes. If you're unfamiliar with what self-employment taxes are or FICA taxes, they're almost the exact same thing as FICA taxes, just for those who don't have employers. We'll talk more about FICA and FICA taxes later on, but for the most part, conceptually, just think of them as the exact same thing because they're made up of the exact same taxes. So that's when the LLC is taxed as a pass-through. Everything is subject to self-employment taxes, which is basically FICA taxes. Now, when the LLC is taxed as an S-Corporation, things are a little bit different. S-Corporation taxation permits the members to actually cut themselves salaries out of the LLC. Only those salaries will be subject to self-employment taxes or FICA taxes. Any distributions on profits from the S-Corporation that flow through to the members are not levied self-employment taxes. Now, there's more nuance than it just being that simple. There's some additional requirements that go into filing as an S-Corp. The salaries that are cut to the members have to be considered reasonable compensation. The IRS has some guidelines you can check out on their website exactly what that means for your particular industry. In addition, as a result of this tax move saving people a lot of money in self-employment taxes, there is higher scrutiny by the IRS for S-Corporations, and the Biden administration has even talked about putting the kibosh on this strategy that we're talking about today. There's also more administrative requirements of tracking things like basis and distributions and etc. And there's also more annual requirements you have to meet too. I would say if you're considering moving your LLC from pass-through taxation to S-Corporation taxation, speak with a tax professional in your unique situation. So why would you even choose to file as an S-Corp in the first place? Well, as you might have figured out by now, the ability to save money on self-employment taxes is theoretically unlimited, whereby originally when you were pass-through taxed on your LLC, everything was subject to self-employment taxes. From the S-Corporation standpoint, only the salaries would be assessed self-employment taxes, and everything else would not be assessed self-employment taxes. Specifically for 2023, self-employment taxes, or FICA, are 15.3% of your compensation. That 15.3% is made up of 12.4% for Social Security and then 2.9% for Medicare. Any distributions that come through from the S-Corp are not subject to those taxes, so you're saving a good amount of money there, depending on your situation. But keep in mind, as mentioned in my previous video on how Social Security works, if you pay yourself a small salary, you're really not contributing a ton to the Social Security Administration. So on the back end, when you actually go and file for Social Security, don't be surprised if your benefit that they're promising you is very small. Sure, the back of the napkin math seems to indicate that if you were to invest all the money you otherwise would pay the Social Security Administration in taxes, could you theoretically get a high enough rate of return to outperform what the Social Security Administration could potentially even pay you in the first place? Yes, there's some models out there that say based on long-term averages you could do that. However, that doesn't take into account, number one, that the averages will continue, right? Past performance is no guarantee of future performance. And then number two, from a risk-adjusted standpoint, Social Security benefits are guaranteed by the federal government. Your investment returns in your portfolio are not. And so while it might seem compelling to try to pay as little as possible in self-employment taxes to, reduce your tax burden today, keep in mind you are disenfranchising your future self. And I can tell you psychologically, working with a number of retirees, their Social Security benefit coming to them in the mailbox every single month is a super psychologically attractive method of making sure you never run out of money. First and foremost, you have to pay yourself reasonable compensation. When you're looking at potentially flexing that number up or down, depending on your unique situation, it's something to consider that the less you pay in Social Security taxes, the more you'll disenfranchise 70-year-old you from a Social Security benefit standpoint. So when would you start looking into filing as an S-Corp if you're currently being taxed as a pass-through? Well, number one, I'd make sure that your cash flow is consistent to some degree and that the company is most of the time profitable. It's really hard to make business decisions on how much to pay people by way of salaries if your cash flow is all over the place. And the last thing we want to do is be flexing that salary number wildly every single year. That would be high grounds for an IRS agent to come knocking. And the last thing we want is some G-man coming to pay you a visit. In addition, I would look towards revenue, and at what point the revenue is far exceeding what you as the owner or you all as the members would need to take out by way of salary to pay all your bills and still feel comfortable. What I mean by that is if you run a business and it's profiting 200 grand a year, but you as the business owner should really only be taking a salary of 100 grand based on the type of work you do, at that point, it probably would make sense to look into filing as an S-Corp because there's so much more profits than you need to take home as the business owner. At that point, you might be looking into saying, okay, what's a reasonable salary for my job? Pay yourself that reasonable salary out of the S-Corp and take the rest as a distribution. The other demographic I would look at to when it would make sense to file as an S-Corp is when you're ready to take your retirement savings to the next level. When you do file as an S-Corp, not only is your revenue probably much higher than it was many years ago when you were just filing as a pass-through or not even an LLC at all, but in addition to that, once you do have both an employee and an employer on the business structure, you're allowed to fund things like 401ks, cash balance plans, that allow for massive tax deductions, or at least allow for massive tax deferral if these retirement plans are structured in a Roth fashion. And these types of plans wouldn't really be available to those who are just LLC pass-throughs or sole proprietors. When you reach that point, feel free to send me a message. I'll get you squared away on which options are available and what might make sense for your situation. But just know, as your revenue continues to climb, your ability to take tax deductions on retirement plans and or just your ability to tax defer retirement-oriented savings in general goes up. And the S-Corp pretty much opens the door to some of these opportunities. So calls to action: if you are an LLC that's being taxed as a pass-through entity, you might want to consider the efficacy of filing as an S-Corporation. In particular, I would highly recommend speaking with a tax professional on your unique situation. They'll be able to crunch the numbers and really provide some guidance as to whether or not the additional administrative hurdles make sense for your specific industry. But nonetheless, it's something to bring to them, especially as we approach tax time. It's a great conversation for future planning. I'll drop some links down below to some of the stuff we talked about relative to business structures and what reasonable compensation would be considered by the IRS. If you have further questions, drop them in the chat below, send me an email, we'll get you squared away. Have an awesome rest of your week. We'll chat with you later. Bye.